Your pay stub is lying to you, or more accurately, it's selling you a massive dream. Every time you look at that top number, your brain does a little happy dance. You think, great, I've made X amount of dollars this year. And because of that, you start making massive financial decisions like buying a house or financing that car based on a number that literally does not exist in your bank account. Worse yet, banks use that same number to qualify you for the maximum mortgage possible. They look at your gross income and say, you can afford this house, while completely ignoring the fact that you and I live, breathe, and pay all of our bills, groceries, internet, cell phone, on the net income. In my opinion, this is the number one reason people end up house poor. On this video, I'm going to show you where you need to go to learn how much you're actually bringing home every month, so that when you decide to make the largest purchase in your adult life, you don't put yourself and or your family in harm's way. For those of you that don't know me, my name is Robert, and on this channel, we simplify the home loan process. Legal. Assuming that you make $75,000 a year, your gross income is $6,250 a month. This is the number that a lot of us are banking on. That's not the money that we live on. That's not the money that you get to keep. More so for those of you that are in business for self, 1099. I'll do a separate video on that. But this is the gross amount. From that standpoint, when you're looking at buying a home, a lender like ourselves, we are going to qualify you as a buyer with the maximum, the highest purchase price possible. I had a consultation call yesterday, and the person was asking me, in essence, why is it that I, as a lender, don't prevent you all as a buyer from buying in a certain place? Well, that could be construed as being discriminatory. And that's not my job. That's not a lender's job. The lender is saying, hey, based upon the information that you've submitted and the rules in place, this is the maximum amount that you can qualify for. The rest, respectfully, is on you, right? I told that person, look, if someone asks me for my opinion, I tread lightly, but this is how I answer those questions on how much you should buy, okay? And so from a lending standpoint, when we look at the different loan types, we got a VA, conventional, FHA, USDA. Here are the rules. I've actually done VA loans where the total ratio, the back end ratio, was over 60%. Now, what you have to understand is that is a specific or a special circumstance, because those folks earned a lot of money. And so the point is, with VA, there are no ratios. What there is a residual income test. And this is why I say VA is the best loan that's out there, because it really looks at your net income to determine if you can qualify for not just said home, but a maintenance factor as well. I digress. Conventional loans, there's no front end ratio, okay? There's only a back end ratio, and it's at 49.9%, okay? FHA loans, there's a front end ratio at 46.99%, and then the back end ratio at 56.99%. USDA, 33.99%, back end at 45.99%. The reason that that is important is because when we look in our example here, based on $75,000 a year, the maximum payments for the different loan types, again, VA, there is no ratios to go by. It's going to go by your residual income. But for conventional, based on a $75,000 a year salary or $6,250 a month gross, you could get a conventional loan at maximum $3,125 a month. And that's at 50% or 49.9% of your income. So it could be done, but should you? That's the only question that I want to pose to you. Just because you can, should you? Let's move forward. When you look at the FHA loan, you can go front end as high as 46.99%. So you might be asking, well, Robert, why didn't you do the back end ratio? Well, the back end ratio captures the total debt that we as lenders use to qualify you. When I say total debt, let me explain. Front end ratio covers the mortgage payment, principal, interest, tax, insurance, HOA fees, whatever is involved in that payment. The back end ratio captures car payments, student loans, credit cards, the minimum of those. Now, the back end ratio is somewhat of an illusion as well, because it really doesn't capture all of our expenses, groceries, utilities, so on and so forth. So even that number is generous when we come to qualifying for a loan, because we're not really capturing all of your expenses. This is why I'm not using the back end ratio for those of you out there that are math scholars, but I'm using the front end ratio that's 46.99%. But still, that's a crazy high number. And that's just for the mortgage part of the maximum amount that you could qualify for as a lender. And then USDA, which is more conservative out of all of them, the front end ratio is 33.99. But this 33.99, or this $2,125 based upon our $6,250 a month breakdown, that's the breakdown gross wise monthly of that 75K salary, is the most conservative out of this, but still it's based on this gross. This person could actually qualify for, depending on your debt load, could qualify for possibly up to $400,000 to $425,000, depending on taxes and insurance. So a lot of you guys out there are like, hey, that sounds like a great thing. But again, the purpose of the video is to get you to understand that we live on the net and not the gross. And so as I was talking to this person yesterday, one of the things that they kept asking me is, well, can you tell me how much home I can afford? And the answer really is no. No lender can tell you that. We could give you some guidelines and some things like this video to look at. But the reason I can't really tell you that is because I'm not looking at all of your expenses, nor do I know what type of reserves you have. Truly, I know what you say to me, but we know and understand on a lot of these applications that everybody doesn't divulge everything. What I can do is give you some guide rails. And what I told this person is this: how much money are you bringing home? And the person could not answer that question for me. All they wanted to know is, what's the maximum amount can I qualify for? And this is a bomb. It's a time bomb, a ticking time bomb, right? Ready to go off. Because it's just a matter of time before you find yourself in a situation, that's my tap at a clock. You guys don't talk about me. In a situation where you find yourself house poor. So let's get to the meat of this video. What I want to challenge you guys to do is go to whatever online portal. Most of your employers now have some type of online portal where you could get your pay stub, not just the amount on the web app that you might have, or just the email that shows you how much you're getting deposited into your account. But I want you to go look at the actual pay stub. And this is why, because when you go look at this actual pay stub, you can start getting the breakdown of what actually is being taken out of your pay stub and what you're actually getting, not just on each individual paycheck, but what your year-to-date numbers are. And I believe if you start really paying attention to these things, you'll be better equipped to make these huge buying decisions that you're making when it comes to owning a home. Heck, even now, some of these car payments are crazy. When you look at your pay stub and you get the full description, a lot of information here. One thing that a lot of younger home buyers struggle with, or people that have not had a home or something of that nature, or maybe moving out of a family home and moving out on your own, is the pay periods or the frequency. Because Bills come due at the first of the month, first to fifth, so on and so forth. But your pay frequency might be one in which you get paid twice a month or 24 times a year. That's something that you have to adjust with. That's just lagniappe. That's extra. But understand what your pay cycles are, your pay periods. But as you can see here, you get your gross income comes in, all right? And then they give you a year-to-date gross income calculation and the year-to-date deductions. And then lastly, you'll get your year-to-date net income. Now, it might be situated differently on your pay stub, depending on who you work for and what company they use, what state you're in, because a lot of you all are living in places where there's state income tax as well. Even more the reason to understand this. All of us have to pay FICA and FUTA. I remember when my kids started working, they was like, who is FICA and FUTA on my check? You feel me? And Medicaid. Who are those folks? They wasn't at work with me. That's a part of the game. If you have child support or some of these other obligations, it's going to show up on the description here. And this is one of the reasons we as lenders, we need to get that pay stub, the full pay stub with all the descriptions. And so it behooves you, if you want to own and buy real estate or purchase a home or do anything that you're going to have to borrow money for, you need to understand how much money you're bringing home monthly. Because if not, you can be qualified for something that you really can't afford because your gross income here is a lot higher than what you actually bring home. So this is not a concept that I'm trying to blow your mind with. The more I do these videos and the longer I'm in this space as a loan officer, NMLS license number 180100, you guys can check that out. The more I'm understanding, we need to simplify things. Hence the tagline of the channel. We simplify the home loan process. And so I challenge you to go and get your pay stubs for the most recent 30 days. A lot of you are going to have an online portal. Download those pay stubs to your computer or your phone or what have you, and open it up and look at the deductions and where you are year to date, not only from the gross, but the net income, because the net income is what we live on. The net income is what is going to determine if you buy a house and you feel comfortable and it's a blessing to you, or you're lamenting about how horrible it is because we did not understand that as a lender, qualifying you on the gross. But you as a person that knows before you owe, that's what I'm trying to educate you on. You understand that net concept. And then you have to determine what is comfortable to you based on the numbers that we give. You have to be comfortable with what you're making and what is left over. A lot of you guys have been reaching out, and I appreciate it, scheduling a consultation. If you want to do so and you're watching, the link is in the description below. Before you reach out and have a conversation with me, if you watch this video, download those pay stubs and get an idea as to how much money you're actually making, bring home, and that will better help me serve you determine how much home you really should buy. Because we qualify on the gross, but you live on the net. If this video was something that you found useful and you know somebody that would help, share it with them. Sharing is caring, and I thank you in advance. It's very important to understand, once you know how much you really can afford, what loan type you should enter into. Watch these next two videos that will help you understand that next step as you continue in your education until the time you're ready to reach out. Let's be good to one another. Let us let grace abound. But most importantly, you guys stay blessed. Indeed.